Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market, and we are seeing some weakness after hours with the price down about $1. So we are looking at a bull break to a certain degree, but not the kind of strong follow through we were looking for. And how do we know not to trust this bull break? And it's the lack of volume, in my opinion. Tomorrow we have the financial sector beginning its earnings, and that is going to dictate some significant reaction in how the market perceives the other financial sector names that do not have earnings tomorrow, but have them approaching. And the financial sector is the second biggest impact on the S&P 500 behind the tech sector. So it's at a key point, and we're still watching this 4-hour ascending triangle pattern. We got over the resistance line here, but it's more of a resistance zone rather than just a clear-cut level. And again, the lack of volume on the bull break was definitely concerning for the bulls. When you see a clear breakout, you need the volume to back it up. So here we are, still within this pattern, and if we do not break tomorrow, we will likely break on Monday, as we're running out of space here within this pattern before a break is imminent. If we do get a bull break, this weekly equilibrium is going to be looking really good, and we're going to be having a target on the gap fill on the daily time frame at 270.19, and that'll put us right back in the middle of this equilibrium. And then we'll be looking for a break. So it's going to be a tightening pattern. I want to see a bull break because I love equilibrium patterns, and they're so very clear. We just had one on cryptocurrency that gave some very easy gains, and I want to see it on SPY as well. So I would like to see the bulls make it up to 270, and then we'll take it from there and likely see a tightening spring for the rest of the market until a clear break in the summer. But that's getting a little bit ahead of ourselves. One step, one day at a time. IWM on the daily, a much more clear bull break. So very clearly getting over resistance. We have lower highs and lower lows, higher low, higher high. The momentum has shifted back, and the weekly time frame shows a tightening equilibrium pattern. It's perfection right now. High, low, lower high, higher low, and here we are right in the middle of that range. So this is going to be a nice little pattern and could be a canary in the coal mine, meaning it gives us a little bit of a heads up as to which way SPY could break if we get an early break in this IWM equilibrium. But again, it could stay in this pattern for another month. QQQ on the daily chart also made a bull break a little bit more convincingly than the S&P 500, getting over that resistance and giving us a higher low and a higher high. The weekly time frame on QQQ is still an uptrend, higher lows and higher highs, and our new higher low on the weekly is 153.88 to keep the bulls in control and looking for the potential of some follow-through. So that is the patterns that we're watching. The 4-hour time frame is the most important one for me on SPY, and then it all goes to the weekly charts to be looking for these equilibriums. VIX is continuing to see bearish action, support 1857, and we broke that level. So it's lower highs and lower lows. The next support level is down at 1626. It's been very clear that the bulls have been unable to break the lower high pattern. And when you're looking at clear rejections, it's if we don't break the price levels, the bears keep control, and that's where we've been over the last couple of weeks. And that's not changing anytime soon. The last bounce attempt that I will now be looking at is 2312, and here we are over 25% below that level. So it's definitely worth watching, but the bears have full control right now. Weekly time frame for VIX pulling back. We will still form a higher low compared to the weekly support level down at 1331, and watching for the potential of a tightening weekly range here as well. So that's where we stand. Financials earnings starting tomorrow is going to be the biggest short-term catalyst, and we'll see if it's going to bring us back down. We could drop all the way tomorrow morning on SPY to 264 and still be within this pattern. So the bulls do have some space to work with. They just need a volume spike and a clear bull break over this resistance level, and it's going to have to be the start of earnings that is that catalyst. I appreciate you watching. Hope you have a great night, and we'll see you over the weekend.